You're listening to Therapy for Your Money, a podcast about all things money and finance for therapy practice owners. If you want to feel confident and in control of your financial life, then you've come to the right spot. I'm your host, Julie Harris. I'm an accountant and the owner of Green Oak Accounting. My firm specializes in working with private practices across the U.S., and my team and I have worked with hundreds of private practice owners. I'm on a mission to share all the best practices I've learned along the way because I want you to have a profitable private practice. My new book, Profit First for Therapists, is available at most online retailers. You can get it in paperback, audiobook, or ebook as well. Go check it out. Hello, and welcome to Therapy for Your Money. In today's episode, we're talking about what to do if you have a significant amount of tax debt. This often comes with a big old pile of shame as well. If you have either ignored your taxes for a few years, and so you know you owe, but you don't know how much. As an accountant, I've seen plenty of times clients come to me and sheepishly say, got this pile of unopened IRS letters on my desk. I am scared to see what's in them. And so whatever that debt looks like for you, I want to address some things that you can do and encourage you to be empowered when it comes to taking control of the situation. When you end up owing the IRS, and in this episode, I'm going to talk about the IRS, but really this also applies to state tax debt, unemployment, right? Whatever it may be, any kind of government entity. And I'm lumping all of them together because these entities have essentially unlimited power, right? They are government entities. They can come and garnish your wages. They can come take money directly out of your bank account. Whereas other types of creditors do not have that kind of power, but the IRS absolutely does. And if you ignore their letters and their repeated attempts to contact you, they often will just take money out of your bank account. That's your personal account, your business account, your savings account. They are able to see where those accounts are. They have access. They can just come and take money. This is never the first step, right? So that's the good news. Them taking money out of your bank account is never, ever the first step. The IRS putting a lien on your home or your property or your business bank account, that is never the first step. Usually there is a long line and big pile of letters that has been ignored when that all of a sudden happens, right? So if I get a phone call from a potential client who says, hey, the IRS just took money out of my bank account and I'm wanting to get compliant and figure out what's going on, I know that is never, ever the first attempt from the IRS to contact them. So we're going to start with tip number one then. The absolute worst thing you can do when you are receiving notifications from the IRS is to ignore them. The IRS is required by law to provide a multitude of notices, and in each notice, there will be a notice number, and you'll also have a due date and deadline. In most cases, you'll have at least 30 days, sometimes longer, to respond to something, right? Not always, but most of the time you'll have at least 30 days. And what's really, 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 really important is that you make the time to respond in the deadline, by the deadline. The worst thing you can do is not respond by the deadline or really not do anything, right? Inaction is a form of action. But by doing nothing, the options that you have are significantly reduced. Okay. So that's one of the key things I want you to take away from this episode. You will have less options if you do not respond by the deadline. So when you get that letter from the IRS, it is really, really important that you read the whole thing, right? So that's step one. You're getting the letter, you're opening it. Actually, maybe that's step one. Open it, read the entire thing. It's going to give you a lot of information as far as what comes next. And then scan the entire thing, not just the first page, all of the pages, every single one of them, and share it with your accountant or tax preparer. They are highly qualified to know what to do with this. So absolutely do bring them in as soon as possible. Now, ideally, you are getting them this information basically as soon as you've received the notice, right? You're getting the notice, you open up the mail, you send it to them within 24 hours. Now, the reality is often we get these pretty late, almost at the 11th hour when it comes to the deadline. And that is just really challenging, right? That means the accountant tax preparer has to drop everything to deal with this. That's just not a great way of doing business. So the more time you can give your tax preparer, the better, so that they can better help you, right? It's going to give them more options, more time to research, to call the IRS, to respond on your behalf. Time is your friend here. Another good reason to immediately contact your accountant is that they have a lot of experience in this field. They likely know what to do with a notice. And in the rare case that they don't, maybe it's a weird situation, they have a network of accounting professionals usually that they can reach out to and say, hey, I haven't seen one of these before. What do you recommend? Right. So they have the experience, the knowledge to help you and know what the next steps are going to be beyond what is on the letter. Next, if your accountant is a CPA or an EA, they're able to represent you before the IRS and they're able to advocate on your behalf. And now, almost always, when you are in any kind of trouble with the IRS, I do recommend that you are represented by someone. In most cases, you should not represent yourself because you don't know what you don't know, right? For you, this is probably the one and only time you're dealing with the IRS. Whereas for your CPA or EA, they do this all the time. And so they know what to say to the IRS, but even more importantly, sometimes what not to say. So they're going to stop talking when they need to, and they're not going to overshare or give them other information that could open up an audit or other issues when it comes to the IRS. So they're able to advocate on your behalf. They're able to solve a problem on your behalf as long as they have the right forms signed by you and filed with the IRS. That is typically going to be Form 2848. So as long as they have that, they're able to provide it to the IRS. They're able to basically act as you, and that is typically going to be in your very best interest. So I'm going to make some generalizations here, but when it comes to having IRS debt, there are always going to be options, or almost always. So first, filing your return is always better than not filing the return, right? Trying to be compliant, showing that you are doing your very best to be compliant is better than not being compliant. Now, paying something is better than paying nothing. Then reaching out to the IRS proactively to say, I can't pay this. What can you do to help me? Is always better than just ignoring the problem, right? But here are some things that you or your accountant can do if you're not able to pay. You can contact the IRS for a payment plan. There are short-term and long-term payment plans. Some of them, depending on the dollar amount, are automatically approved. Some need approvals. But you are able to go on a payment plan for the most part, as long as you're going to get your debt paid. So getting on a plan like that can be a really, really great option. When you are on a payment plan, it is critical, like 911, super duper important. You have to keep your agreement. If you miss one payment or pay one time late, the plan is no longer valid. So you do need to make that a top priority. You absolutely, no matter what, need to make that payment. So it's not something that you can say like, oh, well, I don't really have the money, so I won't pay it this month. That's going to send you back to square one. You'll still get the credit for the amounts that you paid, but the payment plan will fall out of compliance. You'll have to renegotiate a new payment plan. So once you have that in place, you do want to make sure that it is a dollar amount that is going to be feasible for you and that you stay in compliance. There are, on some occasions, when there's a really, really large debt and you are not able to pay it in full, like it becomes clear you're just never going to have the money to pay this, there is the option of an offer in compromise. So that is when you settle for less money than you actually owe. This is going to be rare. This is not a situation where you owe $200,000 to the IRS, you're making $150,000 a year, and you're just saying, you know, my lifestyle's so expensive, I'm not going to be able to pay. You're not going to be able to typically get an offer in compromise and get that payment reduced. But if you have a payment due of $200,000 and you are now disabled and you're making $30,000 a year, and that's barely covering your living expenses, there's a good chance that you're never going to be able to pay that off. That's a different situation, right? So an offer in compromise really, really depends on the facts and circumstances. There are some forms that your accountant can help you fill out to see what the available cash flow is and if you're considered to be currently non-collectible. That's the term that the IRS uses, CNC, currently not collectible. Another thing you can do, as long as you are reading your notices and responding on time, is ask for more time. You are able to ask for more time. The IRS doesn't always have to give it to you, but often they will. And so if you realize, you know what, I'm not going to have enough time to respond to this, there's something going on in my life, and I need additional time, reach out to them proactively before the deadline and say, I would like another 30 days. They often will allow that to happen, but you won't get what you don't ask for. Last but not least, do remember that the IRS makes mistakes. There are plenty of situations where I've seen a client of ours get an IRS notice saying you owe $100,000, $50,000, whatever the dollar amount is, and that actually was not true. The IRS had simply not applied a payment correctly, right? So maybe they had applied it to the wrong year, to the wrong spouse. Maybe a spouse had made a payment that was not applied to the tax return because they're the second spouse on the tax return. So there's a lot of different reasons that that can happen. And so that's why it's always a good idea to run that notice by your tax preparer because they can look at that and say, actually, that's not true. Let us look at the tax return, but we can see here where these payments were made. And so in that case, we often just simply need to call the IRS, tell them about the payment, the exact dollar amount and the date, and they'll apply it. And then the matter is resolved. So you don't always necessarily even owe the payment, but you do have to do something about it. And when that's the case where we realized there was a mistake, the IRS had assessed penalties and interest, and then we actually find the payment, right? We find the payment and get it applied. The IRS waives all penalties and interest because they were never owed in the first place. So another good reason to just reach out to your tax preparer and say, hey, does this look right to you? There's a lot of different reasons that you might get correspondence from the IRS or the state. And so the goal of this episode is really for you to know, I know it's a little bit scary when you get that in your mailbox. At the office, we get IRS letters all the time because we get copied on letters for many of our clients. But when I get one at home, I still get nervous, like, oh, what is going on here, right? Even though I know how to deal with it, I do this all day long. When it's for me personally, it's still a little bit stressful, right? So I want to normalize that, but I want to just encourage you to take action and face it head on instead of avoiding it, because that is what will give you the most options and the very best possible resolution. Okay, before we leave, I do want to talk about scams though. There are a lot of scams out there, and they are looking more and more realistic. And so I want you to just be aware of that. And this is just, again, another great reason to run that by your accountant or tax preparer because they see a lot more scams than you do. The IRS will never contact you by email first. If you owe a dollar amount, they will always send you a letter. So letters first before any other contact in almost every single case. They will not text you, right? We've all probably seen a text that says, hey, this is the IRS. Send me $1,000 in iTunes gift cards. That is not actually the IRS. They will not text you. They will barely even call you. So definitely don't send the money that way. And if you are sending money to the actual IRS, it should always be through official channels where you have proof that you sent the money, right? So iTunes gift cards, always out. So really beware of scams by email, by text, but even by letter. So we're seeing a lot of letters that do look kind of official. There's usually some clues for us, right? Usually there will be at the bottom a footer that clues us in, or the address on the letter will be an address that is actually not one of the IRS service centers. So there are some clues available there. Those are a little bit harder to decipher, but that's why we kind of go back to the beginning of the episode. If you're scanning every single page and sending the whole thing to your accountant, we'll be able to help you figure out if the letter is a scam or not. But generally, if there are a lot of misspelled words or it just looks real funky, right? The wording is odd. That could be a scam. Not always, but it could be. So it's completely okay to be a little bit suspicious. Call the number on the letter that you receive and just to double check in this day and age with all the scams out there. All right, that's it for this episode. I hope that if you have a big amount of IRS debt or are not able to pay your tax bill, you've got some tips now to go ahead and take action. If you are like lots of practice owners and this conversation about owing the IRS made you really, really uncomfortable, then I want to tell you about a course I have available that will teach you everything you need to know as a business owner about taxes. You can go to greenoakaccounting.com/tax. That's TAX to learn all about it. It's really, really well priced. And the goal of the course is to teach you about things like what taxes you'll have to pay as a business owner, how you should save for taxes, how much you should save for taxes, how to make those quarterly estimated tax payments. So we'll cover all of those items in the course. And so if you are just starting your private practice, or even if you're an established practice owner, but you just feel real nervous about all things tax, I encourage you to go check it out. You can see all the details at greenoakaccounting.com/tax. Take care, everyone.
The information contained in this podcast represents the host and guest's general opinions and should not be construed as personalized accounting and tax advice. Listeners should consider all facts and circumstances before applying this information and seek appropriate advice from an accountant, financial planner, lawyer, or other professional. Any info provided does not constitute accounting, tax, or legal advice.